Ira Epstein of Linn Associates with your agriculture wrap-up, and this is going to be your weekend edition for this Friday, the 3rd of April, 2020. All right, what a weekend it's been, because we've seen the meat markets go into a free fall. They haven't given up. They just keep crashing down in price. We've looked at what the grain markets are doing. They've been under their pressure, but we know that the farmers are out in the fields. They're doing their planting. We know that in different parts of the world what's going on is some people are holding grain off the market, trying, because of the fear of COVID, keeping supplies at home until they know where they're at. So you see the wheat market up even today. That's one of the features that we saw, but you see the beans are down and the corn market is down. As for the rest of the market, the stock market down, but that's nothing surprising on a Friday going into COVID numbers. When we take a look at a monthly area chart of closes on soybeans, you're under the 18-month moving average of closes. That's bearish. We've been here, done this into these zones. You finished off at 854.25. The most recent low was the 837.25 area. That's why I have it listed for you. And that's, by the way, on this chart of closing prices. Got that? So when I come to the bar chart, you can see even a lower price towards the 820 area. And as we look at this chart, you were going sideways for a bit here, just like this. And then the market started breaking out, and that breakout has been, you had one rally back in, and you're still in that breakout zone, as you will. When you look at swing lines, and this is that same identical chart with the swing line study, and if you get my charting course, it's all in there, and if you use our charting software, the swing lines are part of the package that we have. Lower highs, lower lows. So until this market gets back up and over 897, the pattern is bearish. Bear patterns are generally defined by markets that have lower highs and lower lows. And what a swing line does is it automatically places on the chart and it tells you where they're at. There's 5 different rules that it follows looking at the previous week as to where the line is drawn. When we look at resistance points with moving averages, all you did is rally back up to the 100 and the 18-week average, held those, if you will. On the rally, the market couldn't bust through them and didn't bust through prior highs, and then started down again. Now, it's very hard to get and stay under a Bollinger Band. That number comes in at 841.25. What a Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. And it can bend down, it can go sideways, it can bend upwards. Can you get out of it? Yes. You want to be able to hit the band and step out of it occasionally, because if you're a trader like I am, I'm looking that if the market's going to hold that band 95% of the time, that is a potential objective if I'm short, looking for support. I do not turn around and say that's where I want to buy the market to get a bounce. That's not how I teach trading it. When you get a rally, it's the objective on the upside, one of them. So you look to see what that's going to do. So right now, a bear market, one of the objectives, 841.25, and momentum still on this slipping sideways more than anything else. In the meal market, the longer picture is going to have one of lower highs, lower lows. Now this is where a market can get excessive, right here. When markets try to stay inside, to the other side, outside the band, then they fight to get back in. Now this week, this is soybean oil, by the way. On this week, we finished at 25.64, just under the 25.80, and you were under it right here. It's not uncommon then to get the market to try to move back within these bands, and that's what the market's been doing, but it has been quite bearish, if anything. In the corn market, what have we got? We have a bear market right now. Lower highs, certainly lower lows. Momentum still pointing down. Now the settlement was 330.75. You're still got underneath this 339.5. You're outside of the band, so I'm wary. What I teach my traders is you never sell under the band, you never buy over the band. The market's looking to snap back the price in the band. It could be just sideways to do it, and it could be a rally. Why put yourself in harm's way? In the wheat market, when you had this monster rally from the lower band, that's where I think pros got out. I can't tell you where they got long. I tell you, I think if they're long, because the bias is up when you're over the 18-week average, that the market got here and got thrown back. You have a neutral chart. You're literally trading against the 18-week moving average of closes with a higher high and a lower low. In the sugar, the trend is down. You've got lower highs, lower lows. Now, this was a market that was just pushing the 16-cent area. Now you're down to 10. I'd be very cautious about pressing the short side. It's just like energy prices. You'll get to a point where out of nowhere some piece of news comes because that's a heck of a break. I understand why the market is down. Think of the word automobiles. Think of the word ethanol. Sugar is a big ethanol product. The problem is, around the world, nobody's driving right now, and this is a worldwide phenomenon. So just keep your eye on that. It's still got downside pressure. In the coffee market, we're void of a trend on the weekly chart. You have a lower low, higher high. You came back last week. In fact, the past 3 weeks, you keep visiting this 18-week average of closes. I don't see a trend yet setting in. Cotton has stayed out of this Bollinger Band now a couple of weeks in a row. Be careful. Markets like to move to the right-hand side of them. So you're getting to the point where I'm concerned. You certainly are out of it this week. Last week you were out of it as well. The week before you settled at, 53.68. You were under the lower band. And right here on this week you settled 60.49, just over it. So you've got 3 weeks in a row where you're under the lower Bollinger Band. That gives the market, in my opinion, a 98% chance, 98, of trying to get back to the other side. I count each successive week outside of the band taking away one of those 5% of the time the market will stay out, then 4, 3, 2, and that's how I use it. Can it go beyond 5? It can't. It's a rule of thumb. It's meant to tell you, be careful. What did I say earlier? I teach my clients not to sell under Bollinger Bands or buy over them. In the cattle, what a crashing market. I mean, I haven't seen anything like this in a long time. We had been down to these prices in September before. Then we had this great rally, and now the market has just let go again. The problem we're getting is multiple in nature, but think of it this way. Slaughterhouses rely on people to come to work to slaughter the animals. In many areas of the country, people aren't going to work. Either they think they're going to get COVID, they have COVID-19. It could be a number of things. But if you can't keep the slaughterhouses running, then the bids don't come in for the animals that are coming into the pen. And it just backs up that way. So something to think about. Hogs are the same identical situation. Hogs aren't trending though. They've got a higher high, a lower low. The idea that the market was bottoming back in this area held up for a bit, but it's the story that I'm telling you. It's JBS, Tyson. You can go out there in the country and read about it, and you'll see what I'm saying. So you put it all together, you're trying to come up with a game plan, and that's what I try to do for you each morning. At 5:40 in the morning approximately, I start recording a video. I cover 40 videos on the futures markets each morning. And unlike these where I'm in them showing it to you, you're seeing my computer, I'm recording the whole screen, and it's like we're sitting next to each other and I'm talking to you, telling you what I see on the daily charts. I'm going to give you first the fundamentals that I'm seeing coming in. If there's any big cattle reports, any big grain reports, we'll talk about them. Sometimes I'll bring up the estimates for you. And then the next step is I'm going to start walking you through the charts, be it the softs, all the markets you want. On the charts, there's a slide bar on the bottom. You're able to just go to the section you want, softs, grains, meats, whatever section you want. I also have financials there, the currencies. I cover quite a few markets. The cost, if you haven't tried it, $7.95. At the very least, for 30 days, it's entertaining. I do think it's way more than that. After that, if you decide to stay, you can go one of two ways. $15 every 30 days, or you can buy a year up front for $156. You'll find a lot of value, and as I do special reports, they're included with it. People that are not with our subscriptions pay $250 a report to see them as I put them out if they're not a subscriber. They only get a couple of free ones during the year, and then after that it's a charge. So I think you'll find the value quite good. Plus, you get our handheld app for quotes, the news, my videos will pop in it quite a bit. Hope to hear from you. That's what keeps these shows going. I'm Ira Epstein. Have a great weekend.